Hi, Dan. Welcome back to F.A.C.E. I always learn from you. Okay. Okay, because you switched that. Okay. And I'm now unmuting you, Dan.
You're muting me, okay.
How are you, bro? How are you, Dan?
I'm fine, you?
Good, good. So you moved to France, right? You moved to France and the whole country shuts down.
Yes, I moved back to Europe, and I commute very much in three countries which I went to school, and
Yeah,
I
nice.
was born. Romania, Italy, and France and Monaco are the
Oh,
area usually where I spent my childhood and adolescent years. So I am back, but I'm
okay.
also coming back to Canada very often for clients.
Okay. Well, you're speaking to someone who's half Romanian. So, Dan, if you want to share your screen, I'm not sure if we were using Zoom the last time you were here, but there's a green box that says
Let
share.
me see. I can you see now?
Not yet. See the
Uh,
green box? You click share, and then it'll show a screen.
okay, I'll click share. Yeah.
Yeah.
Okay.
And
And then
then,
you have to choose the screen you want to share or the window you want to share.
Okay. Desktop. Uh, to share. Okay. Uh,
click it.
will not be able to record. Okay. Later.
Yeah, don't worry about the recording. It's just that green share box, and then your
Yeah.
screens will come up, and then you just choose the one you want to show.
Okay. So should be
We got
Yeah,
it.
there you go. We
All
got it.
right. Okay.
Yeah. Can you see my chart right
Yeah,
now?
we're looking at gold currency index versus gold
Yeah, I
currency.
always like to start in the morning when I get up. I usually look at this chart. It gives me a long-term view. I've been taught in the late 60s and early 70s to always start with the long picture, and then if I do trading, I go down to the 1 day. But always never miss the big picture that can bring you a hurricane or a tsunami.
Okay.
So
So tell us what the blue represents and the gold or yellow represents.
okay, so the yellow represents the gold price in U.S. dollars.
Okay.
Okay, so that's what you're usually familiar. So you can
Right.
see over here that it has recently broken in 2019. It has broken that long-term consolidation
Yeah.
that started in 2013. That's when the bear market ended, and it broke up. But normal markets, if they are not excessively manipulated, they never go up on a straight line. They always have what do we call? It's like a mountain climber. If you
Right. There's
want to
always
get
a plateau where you consolidate gains
exactly,
before you climb up to the next
exactly.
level. Okay.
Yeah. So what it shows is that gold definitely broke out of that consolidation. That is also a signal for that destroys one of the scenarios that I kept in mind, but I did not believe. I gave low probability, and that when the bear market started in 2012, it was a possibility that it retraces all the bull market that started in 2000 down to about 2000, less than I think about 450. It started at 250. That was the
Right.
low of the dollar in '99.
Right.
Okay,
Right.
so a full cycle of a bull market would mean that it went to 1900, that it will go down and cancel the whole bull market and go down to about 250, 300.
Right.
That was one scenario. The other scenario is that it's just a pause, a temporary pause in a much bigger and major bull market, historical secular bull market. That was the scenario that I preferred based on other fundamental issues like global debt. So, and there was another issue that I want to mention here is that I don't have that chart here to give it to you, but in 2012, it comes after the 2008 financial crisis.
Yes.
Okay, which when the crisis started, gold started jumping up very fast, and it went from about 1,000 to doubled in price almost to 1,900.
Yeah.
Okay. Now, what happened at that point is that you had a panic in the banking central bank system, and all the central banks at that time got together and coordinated a move to save the U.S. dollar monetary system, which was everybody is admitting, everybody saying it was at the point of collapse. One of the greatest fund managers in the United States, his name escapes me, said that that night he called his wife and told her to go to an ATM machine and take as much cash possible out of the ATM machine, because he didn't think the next day it will open.
Yeah, who was that? Jim Rickards?
No.
Because he wrote about that the ATMs would run dry.
He was the fund manager of Harvard University, I think.
Okay.
He's famous. He's of Egyptian origin. He has a Egyptian name. He's very well known in the United States. So
Mohammed El-Arian.
Exactly. I'm getting old.
Yeah. Normally it would have taken me an hour to remember it. I have like a delayed memory fuse now, Dan.
Yeah.
So
Yes. He called his wife the night before and said, "Go and get as much cash out of the ATM machines, because I don't think tomorrow banks will open." It was so bad. The situation was so bad. But at that time, contrary to today, I'll come back later. United States, the Fed was in coordination with the Bank for International Settlements in Basel, BIS, and with all the central banks, they got together to save the system, and they started pumping money into the system. What they did at that time, with the coordination of the IMF, is that they created SDRs. They printed, as they usually do, out of thin air. They printed SDRs. But not only that, what they did in 2000 and 2011, they decided to sell gold from the official gold reserves of the IMF. The IMF is one of the largest holders of gold reserves. It has more than very close to a little bit over 2,000 tons. And they decided at that moment to approve a sale of about 400, if my memory is correct. I'm not so sure the exact number. And they decided to sell it. So look where the bear market in gold happened. Now there is a top formation over here between 2011 and 2012. That is the time when the IMF transferred the gold to the BIS in Basel. BIS in Basel is the central bank of central banks. It's
Bank of International Settlements.
Yes, they do the buying and selling of gold for central banks.
They're the broker.
So, exactly. So during that year where you see a topping formation in the price of gold, they transferred the gold from the IMF to BIS. And BIS started selling the gold. Now look, during the period of their sale, look what happened to the price of gold. It dropped up to until 2014. It dropped to about 1,200. 1,080 was the low, which was much later.
Yeah.
But they stopped their sales around 1,200. Okay? Which signals the end of the bear market. So despite what central banks and what the IMF is saying, that the sale was planned and arranged in such a way so it will not affect the gold market, you have to be lunatic not to see that it did affect, at least it had the moral suasion on the gold market, and it ended the gold market, bull market over here, which
Right.
I expected to be just a pause before breaking above 2,000 and forced the gold market down. That's where the BIS stopped selling gold. Coincidence?
Did they announce that they were done selling?
They announced that they finished all the gold stock that they'd received from the IMF, that it was sold. It was sold. India central bank was one of the buyers, and other central banks also bought that quantity of gold. Eric Sprott wanted to buy part of it, and he was turned down.
Okay.
So as you can see, that bear market, I would be stupefied if it's just pure coincidence and an accidental correlation. It just doesn't make sense. It had the effect, and the printing of money, the cutting of interest rates, which was coordinated by all the central banks at that time, pushed gold down, but they stopped it, and momentum completely crashed at that time. It did not continue by itself lower, as some anti-gold were expecting. They were expecting gold price to go under 1,000.
Yeah, a lot of targets at 700-800. Could that happen again, Dan, if they, say we get to 1580, 1600 this spring and the dollar's under pressure, could the IMF decide to do it again? And one other point with your chart here, there is a divergence where it didn't have the same impact on global currencies, what the IMF did, that it had in the dollar, and looks like global currencies are about or making new highs. The gold is making new highs against global currencies, although far away from in the gold. What's that tell you?
Yes, let me show you the chart, the same chart. This chart shows the index of the top 20 countries ranked by GDP, including the US dollar.
Okay.
So it shows here that gold, in a base of all the fiat currencies, never really went into a bear market. It really went just, as you can see, it almost stayed close to the top, contrary to in US dollars. Okay.
Yeah.
Now let me show you the same chart, but unadjusted for GDP. Okay. So here you have 20 years of the same chart. Okay, this one.
Yeah.
But unadjusted for GDP, and there you can see it broke.
It's making new highs.
Makes new high. It has made new highs in all currencies except the US dollar. The lagging currency has been the US dollar, which has not yet. It has to cross somewhere above 1,800 to go into new highs.
Right.
Okay.
So now this is a precursor. What all the global currencies are doing minus the dollar, that eventually the dollar could catch up. Gold price could catch up to what's happening globally.
Exactly. It's not the global currency who will catch up to the dollar. It's the dollar that will catch up to
Right.
the global currencies. Now you ask me the question: can central banks do that again? What they did in 2000 and after 2008? Yes, they can do the same thing again, but it requires a coordination between all the central banks, as it happened in 2008 to 2011.
I
I
see.
don't see that. I don't see that situation today.
No.
Irrespective, I'm not here picking on Trump. I'm not picking on United States. I'm just observing reality. That I like it or that I don't like it, it doesn't matter. When I see a murder happen in the middle of the street, I don't care that I like it or not. I report it as it happens. Many Trump supporters, when they see something negative happening, because they love Trump, they pretend it doesn't exist. They call it fake news. They call it all kinds, but they refuse to admit reality. It happens to supporters of Trump. It happens to supporters of other political parties. Okay?
Yes.
It's
Yep.
the state of denial. Okay?
Okay.
I don't care, and my sentiments towards Obama against Trump, against Macron, that I like them or not, it's irrelevant. My question is it possible to have a coordination between the central banks today under Trump as it happened during Clinton, Bush, Obama? Facts indicate that Trump hates any kind of international coordination, globalization. He hates the world. He hates working together in any environment. And we have the best example, the most recent one in London at NATO meeting. It was even Johnson, which is you could say UK, it's a US
Trump.
ally,
He's
turned
the Trump
against,
of the UK.
yeah, turned against Trump, refused to come to a press conference in public to be seen in public with Trump, bashed Trump behind his back. So I don't see today a possibility of us sitting together between United States and all the central banks, all the governments, to coordinate in case of a crisis like in 2008 and try to pump money into the system again and do a coordinated sale of gold reserves from United States Treasury. I'm not going to go into the details between the
It's every
Fed
man
and
for himself now, Dan. That's your point.
exactly,
Every nation for itself. That's what nationalism is.
exactly,
I'd like
and
to
that
ask you. Okay, go ahead, Dan.
it means that we're going to have a crash, a crisis in which gold will shine. It is in these kinds of circumstances that gold shines.
Okay.
Okay.
All right. I want to ask you what your view is, and if you can read anything into Christine Lagarde coming in as a new ECB central bank chairman, with her experience of restructuring debt of countries. You read anything into Lagarde's history and her new role and the implications of it?
Yeah, I don't see very much change with Christine Lagarde. Certainly, each individual has its own personality and brings its own character into a position. But in general, most of the central banks follow the international mood of the time.
Isn't
And
she the first one, though, that comes from the IMF to become a central banker? And so wasn't she there when the scheme to coordinate a top in the gold market, Christine Lagarde was part of it?
Yes,
Okay.
and that brings her an excellent experience of the situation in 2008. but she will have to deal with a different environment where
Yeah.
Donald Trump doesn't want to collaborate.
Right.
Donald Trump doesn't like the IMF. Donald Trump doesn't like any kind of coordinated global action. Okay? So the fact that she was there in 2008, she dealt with a situation that existing with facts at that time. Those facts don't exist anymore. Okay? So she has to
understand.
deal with a different environment. Okay?
Yeah.
But she has, like her or not, she has a very good experience. It's a person who knows everybody already. She doesn't have to learn the job. That doesn't mean she's going to be good, but it shows purely if you base, Dale, I don't know if you have hired people in your life. The first thing that you do when you hire people, you look at their CV, you look at their past. It might not be, the person might not be as good as that person was in a previous job, but that's your starting point.
Right.
So I think on that basis, I say that Christine Lagarde is highly qualified, highly experienced, but she has a bias of printing money. Okay.
Okay.
So I expect her to push for printing more money.
Unlike the Fed chairman we lost yesterday, Paul Volcker, who they called the liquidator.
Exactly, but keep in mind that even though Trump and the Fed are not necessarily pro-printing money, they have, Powell has indicated that he will do anything to keep the stock market up. And Donald Trump is I love debt to infinity. I love going bankrupt. I love debt.
He's the king of debt.
Exactly.
Let me ask you with debt, and I want to wrap it because I've been asking people about this and what their views are. Dan, what's happening in the Fed funds market, overnight repo market? What's your view on that? Is that a canary in the coal mine? At first, we were given excuses where there was just pressure for funds because there were tax payments due, and the Fed has pumped billions and billions into it to stabilize it. You have a view on what's happening in short-term money markets?
Well, Dale, what happened in the financial industry is that there has been a lot of parallel institutions, derivatives, the offshore dollar market that started in the 1970s.
Oh, euro dollars, yeah.
Exactly, and that is money that is very difficult for the BIS, for the Fed. It makes their data today completely obsolete. So they are completely blind in their actions. They don't know what's happening in the market because there are so many offshore institutions, offshore dollars that can crash the market, and they cannot see it in their indicators, in their data. So the derivative market—
They're off balance sheet stuff you're talking about?
Exactly. And it is not, it doesn't appear clearly. It's like an iceberg. The gold market is the same thing. For an analyst like me, what makes analyzing gold very hard is that the information, the data that I have access to is just the above water piece of ice of the iceberg. 90% of the gold market is underground. I cannot see it.
Okay.
Okay.
All right.
So it's the same. It's the same thing now with all those dollars, yuan, euros, which are out of the control of the central banks. The central banks, their instruments cannot trigger, control, accelerate, decrease in velocity of those dollars. They've lost control of it.
Okay.
Okay.
All right. So you have another chart you wanted to show to wrap it up?
I wanted to bring you this chart up. It's the transparent gold holdings. What we talk about when they say transparent gold holdings It's what I meant today. This chart only shows the gold that it's visible in private hands, and that is ETF funds from all over the world.
Okay.
So Nick Lurd from Australia has created a composite of all the ETFs holdings around the world. And I want to show this is a chart since the beginning of the bull market in gold in 2000.
Right.
So you can see it's gone up until 2012. It crashed when the central banks crushed gold with the sales of the IMF. It's been coming up, and look at what happens is that now it's coming very close to the high of 2012, getting ready to break up. That means that there's an incredible accumulation of gold by private individuals worldwide. But if I look at the American picture, I would not be surprised to see that it hasn't happened anything. Okay? So it's mostly the world population, Asia, Europe, which is now buying physical gold and stores it in ETF or physically. The last thing that I want to mention to you, what makes me bullish and what makes me think that will break very, very soon above 2000 is that continuation, and that has been my thesis for gold 5,000, not 10,000, but gold 5,000. And that is central bank attitude towards gold has changed.
Yeah.
And in the last 6 months to a year, central banks have been buying gold like crazy, and they have been talking positively about gold as the etalon of the international monetary system. So I wouldn't be surprised to see the Europeans with the Chinese, the Indians, and the Chinese and the Russian creating kind of a crypto international currency, not the SDR, because the SDR is under the veto control of United States, but some kind of an international cryptocurrency backed by gold outside of the control of United States in case there is a crisis. I see coordination going on right now for an international payment system, a coordination between European Union, China, Russia, and also
they're tired of being threatened, being unable to use SWIFT if you know, at the whim of the U.S.
Exactly. This is something that I'm watching very carefully. It is not, it's done beyond closed doors for the moment, but there is an excuse that Europeans are using. It's Iran, but they are not doing it just to help Iran. They don't give a damn about Iran. The new payment system that Europe has created, it has a much bigger objective than Iran. It has the objective of creating an ex-US dollar payment system out of the control of United States. And it has at each one of the meetings to create this system, the Russian and the Chinese were part of the conversations, part of the coordination, part of the planning.
Okay, I just got a great question from one of our attendees, F.A.C.E. Who is selling gold to the central banks? That all the gold they're buying, who's the seller?
Most of the selling is done by other central banks. Not all of them are buying. There are some that are selling. And there is mining. China buys all the mining production of China. They don't report. They don't give any information. They are buying all the gold that is mined in China. And China is one of the 3 largest gold producers today.
Who are the other 2?
Russia is also buying all the gold, not all of it, but it's very I'm waiting for the data for 2019, but it's coming very close to approaching 90 to 100% of the gold production of Russia, which is also a very large gold producer in the world. Okay. So the largest buyers of gold, which is Russia and China, are mostly buying their own gold. Okay. Exactly. And keep
Yeah.
in mind, when they buy their own gold, they don't pay
They have
profit.
nationalized. I mean, everything's nationalized in China, so
Exactly.
it is their
Exactly.
gold. Yeah.
Yeah.
Okay.
So most of the gold that they are buying, and they are the largest gold buyers, it's from there. Kazakhstan, Mongolia, Uzbekistan, the same thing. They are buying their own gold production.
Okay.
So the majority of the gold that central banks from what's called developing countries like Russia, China, Kazakhstan, Uzbekistan, Mongolia, they are buying their gold mine production
Okay.
internally. But there is also some Western Czechia is selling, but they're selling very little gold. They sell about 1 ton. They only have 8 tons right now. Okay,
Who's
that's
that?
very Czechia.
Chechnya?
No, the Republic of Czech
Oh.
Republic.
Oh, the Czechoslovakians. Okay. All right.
Yeah, not
Okay.
the Czechoslovakian.
Oh,
Because
yeah. It's not right. Right. They're divided now.
Yeah.
All right.
Yeah. So to the question of your auditor, most of the gold that major buyers today, which are Russia, China, they are buying their own gold mine production in large proportion.
That's a pearl to know, and a great question. And Dan, another great interview, and I wish you and your family blessed holidays and a great new year in 2020. And thank you so much for coming in every now and then and sharing your views and edifying me and everyone who listens to you.
Thank you very much, Dale. It's a pleasure, and I wish to your auditors, to you, and to everybody happy holidays and a happy new year. Let's hope that that I'm wrong and things will not be as bad.
Okay, don't wait to buy gold. Buy gold and wait.
Yes.
All right, Dan. Thank you so much, my friend. And that's a wrap for us, everyone, on Turnaround Tuesday. Remember, don't just count your pips or coins or bars or however you form or ETFs. Count your blessings. We'll see everyone tomorrow. Thank you, Brock. Adios, everyone. Good hunting the rest of the day. Thanks again, Dan.
Pleasure, Dale. Bye.
Bye-bye.